Hey, Dan Passarelli here. Well, everybody's talking about the Fed meeting, and I bet you've been reading about it all day and listening to it in John's group coaching class, where he has given some good trade ideas centered around this week. But I figure you've already got that covered, so I wanted to share with you something outside of that that can be really beneficial. I was doing my research going into this next earnings season, as I always do, and I saw that analysts are lowering their guidance on every industry across the board except the real estate industry. They're actually giving higher guidance. They expect them to make even more than they've made in the past. It's a really strong sector right now. So I started digging into it and I came across this stock, Annaly Capital Management, symbol NLY. Now, if you really want to dig into the equity structure, there's lots of preferred stock and there's lots of different ways of doing this, but only the common stock has options. And so I'm looking at the common stock here. As you can see, the stock's dropped from about $9 all the way down to $6 over the past year, down about 33%. But because this is such a strong sector of the economy, and because we expect it to be pretty strong, this one didn't actually have any analysts that increased their ratings, but it's still rated an overweight. There's some buys, some holds, and there's a higher price target on there. Now, what's really interesting about this, it's got a PE ratio of just 2.45 and a dividend yield of 14.26% in a strong industry, in a stock that looks largely oversold. In fact, here, let me show you the RSI on this, the relative strength index on this. And yep, definitely hit oversold territory on Friday of last week and got a little bit of a bounce yesterday. I think it could take a little bit of time for this to play out, but there's a great deal of room to the upside in an industry where a rising tide raises all ships, an amazing dividend yield, an incredibly low PE ratio, and we bounced off a support level here, and if we can break through this 200-day moving average, it can really take off. So how does one play this? Well, there's a number of different ways, and I played it in two different accounts. In one account, I sold some puts. Earlier this morning, I was able to sell on the day I was recording this is Monday. On Monday morning, I was able to sell the 6-strike puts at 10 cents. Again, this is in another account, basically hoping I would just get assigned and then just ride the stock out. But for folks watching this now, we can look at things like maybe the 6 puts in the September 30th or the 6 puts in the October 7th expiration. And if the stock ends up a little bit higher, closer to the 6.5 strike, maybe even selling the 6.5 puts. Now, also, if you look, the 6.5 calls across the board, I own some in the September 30 and the October 7th. They're really, really cheap. I mean, the volatility levels are whatever they are. They appear to be slightly high, but when the Vegas are less than a half a cent and we're down to a penny bid at 2 cents. I mean, probably this is just a penny bid because some of the market makers are short it. They're amazingly cheap options, and you can buy a lot of them at a very low price. And if the stock ends up taking off higher, it can be an extremely leveraged profit. Just doing some quick, easy math, not even looking at delta, you see that these 6.5 calls are going for 2 cents, where the 6 calls are 25 cents. That means if this stock rallies 50 cents from here, these will go from 2 cents to about 25 cents. These will go from 3 cents to about 25 cents. And so it can be a really, really leveraged profit. And just heading up to $6.50, I mean, it was there, just a few days ago. And if we get that follow through the 200-day moving average, we can easily hit that. So I wanted to share this trade idea with you as you're going through things that you can trade and might feel more safe to trade going in to the Fed announcement. This is Dan Passarelli, Trade Smart.